Do you know that as a trader, you can master the price behavior and price movement to a point of you avoiding price manipulation against you when it comes to making your buy and your sell entry? And what if I show you exactly how you can do that by using just the Bollinger Band setting? This Bollinger Band is the default Bollinger Band setting, and by implementing it correctly using the middle Bollinger Band will help you solve this problem of avoiding price manipulation, that is price taking you out of your trade entry and then eventually playing out in your favor. This is exactly what I am about to share with you in this video on how you can use the middle Bollinger Band to make your entry and become more profitable and avoiding price manipulation. The greatest nightmare of every trader is watching price hitting their stop loss after executing a trade order, and this particular scenario is avoidable by using the middle Bollinger Band standard deviation, which is 2.0. So this is the middle Bollinger Band I am talking about. This can help you to eliminate price manipulation. Most price manipulation happen at the place of entry, at the point of reversal, and this can be avoided by being patient to wait for price to close below the middle Bollinger Band line. Because before all of this price manipulation should have happened and has taken place. Please, I want you to take note of this, that the essence of the Bollinger Band is not for you to determine the trend. The Bollinger Band is just a period of 20, and this period of 20 cannot be used to determine a trend. The deviation is 2.0. So all we are using this to do is for us to time an entry, avoid price manipulation in order for us to get what? A high probability trade. So let's begin from our higher time frame. Now we want to make our analysis, right? So looking at this particular price scenario, let me show you exactly what I am talking about. If you look at this scenario here, you realize that price is giving us a higher low here, a higher high here, right? Then we have this higher low and we have this higher high. That is exactly what we are having. A higher low, a higher high, a higher low, and a higher high. So look at what happened. This price cut across this zone, which become a break of structure. You can see that, so automatically structure has been broken here, and now we are in a downtrend. So once we are in a downtrend, all we need to do is for us to mark our point of interest. What is point of interest? Point of interest are the zone where you are expected to make a trading decision. This trading decision can either be the decision to buy, the decision to sell, or the decision to stay out of the market. Because we do not make a buy or a sell decision anywhere, anyhow. We must meet a specific criteria in a specific zone. So we have this place here is our order block. So our point of interest can actually be an order block. It can be a support and resistance zone. And if you look at this zone too, if I should mark it from here, this is a resistance zone. So you will agree with me that this point to this point is a resistance zone. So now look at what happened. Price returned from here into that resistance zone. Okay, so previously by the movement of this price from here into this zone, you can decide to do what? To sell from here this way. Because if you have marked here as a resistance zone, that should have been your entry. So let's look at 15-minute time frame and see exactly what happened when price got into this zone. Let's look at it first on the 1 hour time frame. So you can now see this is price in that zone. Okay, remember previously we said you can use the upper Bollinger Band and as well as you can use the lower Bollinger Band. So on your 1 hour time frame, assuming you want to make this entry based on 1 hour time frame, look at this. This is a bearish engulfing candlestick pattern. And if you observe carefully, this is a divergence. You are having some sort of equal high, right? And then look at this. This is a divergence confirmation, and price retest the upper Bollinger Band, so you can see that sell to the upside. You will only consider the upper Bollinger Band when price come into that point of interest that you have marked. Now let's go to our 15-minute time frame and see how exactly that trade plays out. Okay, so here is it. This is the 15-minute time frame, and you can see the play out of that particular trade. Do you see that? This is where it plays out. Look at this. This is a divergence which serves as an additional confirmation. So, and then look at what happened now. Price was giving us what? Higher high, higher low, and a higher high. Right? So now price came down and break structure. And after that, you have already marked the order block on your lower time frame because you already have a break of structure on your lower time frame. Look at this. And because you have marked that order block, look at what happened. Price pulled back inside, give you this bearish pin bar, and then that is your entry to this downside. But now, if to avoid this price manipulation, you can now make this entry based on your middle Bollinger Band. So look at what happened, right? You will now be patient for price to close below the middle Bollinger Band. So you see price break into this middle Bollinger Band and do what? Look at this. Price pull back to this middle Bollinger Band, gave you this bearish engulfing pattern. So your entry would have been on this bearish engulfing pattern, and you can see how the price plays out correctly. This is not in isolation. You must first of all determine what the trend of the market is. Very much important before you now proceed and wait for price to come into that zone. So please take note of that. Now look at what happened. From our first previous analysis, we said what? There is an order block, isn't it? So now, because we have this break of structure, this is the order block that breaks structure, and we have wait for price to pull back into that zone. So now price has done what? Price has returned from here. Price has returned into that zone. You may be wondering and be asking yourself that what happened that we do not buy from here, because we are trading in line with the structure of the market. It's because the price has left here now to this point. We can now mark here as our previous zone, for instance, as our point of support. So we'll be waiting for price to sell all the way here before we now look for opportunity to buy back to this upside. And now price is into this place. Let's go to our 15-minute time frame. Can you see that now? So what do? We'll now wait for price to close below the middle Bollinger band. This is the middle Bollinger band, right? So you see price went up, came down, went up again, and look at what happened. Price came down and closed below it here. So here should have been our entry. Immediately after that close of that bearish candle, that is our entry. This is our stop loss. Our stop loss should have been there, and then you can see how the price is playing out after that. So you can see that price keep pushing to the downside. So this is how exactly you can take advantage of this trade entry as far as this particular strategy is concerned, using your Bollinger Band for your buy and sell signal. Remember to always get a confirmation before making your trade decision. Thank you for watching, and I believe you have gained value from this video. If you are yet to subscribe to the channel, please do well to hit on the subscribe button, turn on your notification so you'll be the first to get notified when we upload our next video, and do not forget to like, share and subscribe to the channel. Thank you, and see you in the subsequent video.